That's Tata Motors. Brokerages are positive on the stock. Puneet, we've been seeing some of the numbers coming in from JLR. What is Nomura and EMKAY saying on Tata Motors?
Well, thanks for that. So definitely, it's a continuation of both these brokerages, and they're estimating, continuity in what their estimate was before these numbers came in. And that's something that, both these brokerages have maintained. And that's also because the Q3 results of Tata Motors are expected on 29th of January. So it's not too away from where we are right now. The key factor in both these reports is the free cash flow generator that the company is expected to generate in this particular year of roughly about £1 billion. And that's one of the mainstays of both these reports. So while they have maintained the buy rating, Nomura has a target price of 990 rupees per share. EMKAY has slightly lowered their target price from rupees 1,000 to 950 now. And specifically, they have mentioned that, they are expecting that the sales of Jaguar and Land Rover in this particular year of FY25 will be similar to those levels seen in FY24. And just to give some data point as well, because the sales about 4 lakh mark have been consistent over the last 6 years, starting 2019. So the sales haven't grown much, but we did a detailed piece on how the financials have changed for both Jaguar, Land Rover, as well as the India entity. EMKAY is also estimating that Tata Motors will get to a positive free cash flow generation. Essentially, the 22,000 crore debt that they have will be paid off over the next 2 quarters, and that will essentially become a net debt-free company both on the India entity as well as the JLR entity as well. So that's one of the mainstays of them. But the key factor that they've encapsulated is that EBIT margin guidance of the JLR business is around 8.5% margins, EBIT margins. They say that the company should be able to achieve those levels for FY25. And the 30 billion pound revenue target that the company has, they've done about 13 billion pounds in the first half. That has also been maintained by both these brokerages. So it's a continuity of business and estimates from both these brokerages. EMKAY has slightly reduced the target prices because they are seeing some loss of revenues in terms of PVs, but that's a very incremental. But overall, they see that continuity of business and valuations being very favorable at 4 times EV to EBITDA is one of the key things that they've highlighted in both these reports.